Let's begin by describing an ideal. You are the owner of a crypto trading bot. This bot is working for you 24/7, 365 days a year, trading a predictable, back-tested strategy with better returns than buying and holding large caps, with superior reward to risk ratio of holding altcoins. And that strategy is able to adapt, essentially making it entirely market agnostic. Meaning you could care less what market you're in. You rest easy knowing your portfolio grows every day, regardless of what you do. The only thing you need to do is to decide whether you'll spend your profits on something you've always wanted or compound it to grow your portfolio even faster. Wake up. This, of course, is way too good to be true. Now instead, imagine you have spent the last 2 years experimenting with enough automated trading strategy until you puke. You tested over 1 million data points by hand and found through backtesting a simple, easy-to-explain trading strategy that did very well in the past, but you haven't yet made it robust enough to handle new data. This is where I am now. Well, kind of. My most recent bot traded Ethereum, a highly traded coin, against a stablecoin USDT. It had worked reasonably well for data in 2022 when ETH practically moved up and down a lot. Compared to just buying and holding, my bot was able to outperform it by a good percentage in P&L, but it needed to better adapt to changing market characteristics. It did well from January to April, when the price of Ethereum went down and back up to almost the same level. It then did slightly worse in April to May, when it primarily went down, and again performed superbly when the price consolidated between a huge range from May to the end of the year. It also needed to show results faster. It was difficult to convince customers to wait 6 months to show decent results, as it wasn't possible to guarantee market conditions when they bought. It's not good to be short-sighted, but the harsh reality is that a majority of people are looking for quick, easy wins. Improving my bot to adapt better to market characteristics and being able to show results fast feels doable, ambitious, but doable. To do this, I knew I needed to introduce several constraints to help eliminate certain variables of the market. First was to make the strategy more accessible. One way to do this was to build integrations with centralized exchanges. I had previously made it available only for a single DeFi exchange, as I overestimated the significance of self-custody over convenience and convention. No matter, I can adapt. The second way to make the strategy more accessible was to start this YouTube channel. Besides sharing what's working with my crypto investing and trading strategies, I want to see where people like you are at in your journey. And by sharing videos like this, I will incorporate your feedback on whether you'd be interested in using some of the tools I've built to make my life easier while growing my crypto portfolio. If you're keen on seeing my results, pause the video and say, "I'm with you" in the comments section. This lets me know whether I should be making the bot strategy more public and show how well it works over time. In case you missed my previous video, you can see my overall crypto strategy, where I go over the top 3 areas I'm focused on, with custom trading bot as one of them. You can click on this video here or look for the link in the video's description. So, regarding the custom trading bot, I am developing 2 new custom trading strategies. One aims for stability and another aims for volatility. Let me show you what I mean. We know that profit comes from continuing to take opportunities to buy lower and sell higher. The problem with traditional markets is that it's overwhelmingly difficult to be consistent, given that there's a wide range of prices that a trading pair can have. What if there was a way to know with way more certainty about the price range? What if it's programmed to stay within a range for a statistically significant portion of time? As it turns out, there are a good number of such markets. These happen when you pair a stablecoin with another stablecoin of the same underlying currency. Like USDC and USDT, where both are programmed to peg against the USD, for example. Just because it's programmed to eventually go back to $1, it doesn't mean it's always at $1 all of the time. In fact, when price sways away from $1 is when potential buying or selling opportunities can occur. Notice here, if you draw a rectangle representing a probable price range, you can continually buy at the bottom and sell at the top. The trick is to find such a probable range and ensure it's profitable enough over time. A theoretical scenario can be seen here. You have a small target spread, which is the difference between your buy and sell price, expressed as a percentage, like 50 pips, 0.5%. And with compounding, you can see after 1,000 such trades, you'd expect something like a 185% return. After exchange fees, what's the catch? There probably aren't 1,000 such opportunities in a year. If there was even once a day, though, you'd still have a 46% return. That's probably better than how much you're earning trading on your own. Another trade-off is how much profit we gain per trade. And we're essentially giving up the trend-following component of the market, as there's only really one trend, consolidating and trading within a reasonable price around $1. I found that in most stable to stable markets, the price spread is small, meaning it'd require a larger portfolio to enjoy meaningful profits. So, it may be important that we find stable coins with different underlying market dynamics that are ever so slightly more volatile than other stable coins. And by pairing these two together, we'll get a lot more chances to take more profits. There are two obvious ways to trade these stable to stable markets that come to mind. The first one is to do a cross-exchange arbitrage, where you're buying the same stablecoin, like USDT, for a cheaper price and selling it on another exchange at a higher price, and repeat. By crossing exchanges, you'd need to keep a balance of both stables on both exchanges to avoid having to pay deposit or withdrawal fees going in and out of the exchanges. This isn't ideal from a capital efficiency standpoint. The other way is to trade one stablecoin against a different stablecoin on the same exchange. If we look carefully, we can find several markets that have enough volatility for us to be profitable. Initial backtesting suggests that the return could be 7 to 15%, which is not bad at all, given the risk profile of this strategy is extremely low. This is exciting for me, as this is a much more predictable and repeatable strategy without much competition and relatively way less risk versus other strategies like altcoin spray and pray. Plus, with this bot running, I can earn a steady stream of profits while I learn about other ways to improve my trading. The other class of custom bot trading strategy aims to find markets that exhibit the opposite behavior. We're looking to trade more volatile price movements, but doing so in a risk-controlled way. Particularly, I'm interested in swing trading Bitcoin against USDT or Ethereum against USDT, given their current dominance for the overall crypto market. For this type of bot, a key component would be to implement simple trend-following strategies and divide up allocation into many buckets. A pro trader once suggested allocating only up to 5% of your entire crypto portfolio to this. I think this advice is very similar to the 1 to 2% risk per trade rule of thumb for discretionary trading. The key here is to make many small trades. Another key component is to be able to identify when we're in a range and when we're trending. According to the pro traders I've learned from, most of the time price sits within a range and only shows strong up or down trends a small percentage of the time, though when it moves, it can make fairly big moves. So it's important to have the bot handle both scenarios. Bot trading is not like discretionary trading, where you can occasionally apply judgment calls to override the rules when the situation calls for it. Codifying levels, trend lines, market structure, calculating averages, throwing in if conditions, etc., drive up the bot's complexity really fast, making each an arduous step to take, test, and implement in a real-world setting. For this type of bot to perform, I can think of two main approaches while keeping the bot complexity as low as possible. Keep in mind, these are still untested, and they can end up not playing out at all. One is to find pivot points by gauging how far price is from a mean average, like the exponential moving average. The idea that price should statistically remain close to a mean And if it gets too far away, the chance of it coming back increases. This could be a way to handle the scenario when price is ranging. Another one is to trade with momentum. If there is a strong momentum from seeing a EMA crossover, plus an engulfing candle, it's probably a good idea to look for a scalp trade to capture the short-term momentum. This could be a relatively simple way to catch the sudden moves without too much code complexity. As you can see, building a high-performing bot takes a ton of work to start and months, perhaps years, to really refine. Exploring this way of building a bot can provide value in more ways than one. The most obvious is that if it can prove itself with a few real profitable months without too much drawdown, then it might be ready for public consumption. The other, less obvious, intermediate step is to take away the executing filling risk and just provide the signal for followers to consume and trade on their own. The last thing I'll say is that while the upside is limitless, quote, unquote, the downside is up to 100%. This means the worst thing that can happen is a total loss of your allocated funds. The markets are complex, and it's not guaranteed that the rules cover all the cases, especially when markets behave irrationally. It may not be obvious from my initial description, but this kind of bot is far more risky than the one that aims for stability. Now that I've marked several key destinations for the journey ahead, let's take a look at some next steps that I'm planning to take over the next little while to get closer to these desirable destinations. My immediate next step would be to build an experimental bot in the most naive form, just to see how far away I am to the ideal. Even though the upside to the volatility bot is much higher, the downside is quite scary. I feel that it's a challenge I can take on once I'm more experienced with trading. To minimize complexity and take the surest path forward, I will focus first on the stable-to-stable bot. I want to show that there exists enough opportunities where at the very least you can make 50% return on your money in a year. The theoretical calculation would be about 262 trades for the year, or about 7 trades every 10 days of 0.6% or 60 pips spread each. Judging from the chart, this seems possible if we can accurately detect and dynamically shift the range to capture this 0.6% successfully in each scenario that happens. It'll be hard, but at least it's a concrete path forward to a more profitable future. Going forward, I'll be learning as I build and will share with you each iteration any improvements made and update you about the chance of arriving at the desired destination. To stay in touch on top of all my developments, subscribe to the channel and give me a follow on Twitter. My Twitter handle is found in the video description. One of the goals of this channel is to gather a community of like-minded traders and investors to get better at the crypto game every day. So, hit that subscribe button and share this video with someone who's looking to make it in crypto. I'm looking to hit a certain subscriber goal before releasing a version of my bot for you guys to try. I hope this video gave you enough insight on the upside and risks of using a custom crypto trading bot. When you allocate an appropriate percentage of your crypto portfolio to this game, you will find that a good trading bot can be a key pillar of your overall crypto strategy. I've also shown you the path going forward for my own trading bot. It's my wish that we can do more of these experiments together and see how far we can go in safely automating our crypto portfolio growth. Well, this was really fun for me. I hope it was fun for you. If you liked this video, consider sharing with a friend. What was the biggest takeaway for you? Let me know in the comments. This is Smart Crypto, and you've been so awesome to watch until the end. See you next time.